All right, let's get started. Hello, everyone. Glad to have you here. I'm Louise. Let's navigate the market with clarity and insights. In today's section, I'll be talking about how I personally pick my entry models, right? I'll be talking about how I personally pick my entry models. Now, before you talk about entry models, there is one important thing you have to know, and it's called directional bias. What's even directional bias? Directional bias is what basically your bias, your bias of the market, whether you are aiming to long the market or short the market. Like it's just basically what the current trend of the market, right? Once you have a once your directional bias is correct, like you said, oh, gold is trending, gold is bullish, BTC is bearish. Like your directional bias, the bias whether you are selling or buying, your directional bias is very very important before you talk about entry models. Entry models is basically, will I say, entry models is basically a track or bus that will take you to your direction, to where you are going. Just like if you are going to if you are going to from point A, if you are going from point A to point B, you have to what your means of transportation, which is what either a motorcycle or a tricycle, right? Your means of transportation to your destination is what is called entry models, right? Entry models. Is what I refer to as entry models. I refer entry models to what your means of transportation from point A to point B. You get? Remember, you must have direction. You must have bias. You must have direction where you are going. You say, "Oh, I want to go to point B. I know where point B is." Then you enter what? A tricycle or a motorcycle to that point B. If you don't have direction and just enter a motorcycle, where will you end up going? You will be confused. You if you come to if you enter road now, you don't even know where to head it to, right? So directional bias is very very important before you even start talking about entry models, right? So in this video, I will not say much in this video, but because this video is aimed at what entry models, but I'll just pick a directional bias from this pair, and then we hop into lower time frame and start finding entry models, right, that will deliver us to our destination. Yes, entry models that will deliver us to our destination. Now let me talk about how my entry models will look like first, right? Let me explain my entry models, then we'll go into the chart and look at chart examples, right? So okay, let me off this pair. Now, there's a video I made. I dropped it in my circle, and also my mentees have the video. It's called section break, right? Section break or daily break, right? Now, my entry models. In order to clearly see my entry models on the chart, you have to have this knowledge of section break. But I'll touch it here, right? I'll touch it since I said I'll make a video, a free video about entry models and give you guys. So I'll basically tell you how I spot out my entry models easily on the chart, right? Remember, no matter your entry models, no matter your strategy and your directional bias is wrong, you must hit sell. Price will even give you V1's profit. That's what is called V1's profit. Price will tap your entry, give you small profit, and then before taking you out. No matter your entry model, no matter your strategy, once your directional bias is not in line with the current trade of the market, you'll be hitting sell. That's why you see some traders, they'll be like, "Oh, I'm in my losing streak." In your losing streak is because your directional bias is actually wrong, right? You are following your entry models, you are following your everything. You mark out your inducements, your LBG, everything. If all those things you are marking out is against the trend, you'll be hitting SL, right? So let me leave long talk and explain my entry models. Then, in line with directional bias, we give live example in the chart right now. So now, section break, coming back to section break is basically the range between the high and low of a day. Like the range between the high and low of a daily price action. Something like this. Let's say this Monday, right? Monday candlestick started printing all the way from here, right? Monday candlestick started printing all the way from here. This was let's say Asia section, midnight section, printing all the way from here. Price does what? Give this price action, created the low of the day, then goes up like this, came, let's say price came down like this, then use this other block and pull up again, right? And close there, right? Price action started printing all the way from here, right? This is a point. Monday price action started printing and end up closing here, right? Now from here to here, I call it what section, or you can call it range, right? From here to here is call it Monday section, right? Tuesday section, Wednesday section, all those have this section. So the if you scale down to lower time frame, there is a horizontal lines. Sorry, there is a horizontal dotted lines you on. It will show you what the section of every day, right? The range of price, the range of every day. Like you have to know the price action. Let me just on this stuff so you see what I'm talking about. Okay, now this daily time frame. Let me scale down to something like um here. Let me scale down something like 30 minutes time frame, right? So now this is it. This section break, you see this, can you spot this horizontal sorry, this vertical dotted lines, right? Can you guys spot these vertical dotted lines, these vertical blue dotted lines, right? This is where this Tuesday price action, this is where Tuesday began and Tuesday ended all the way here, right? Tuesday ended all the way here. So let me scale down to 15 minutes time frame for clearer view of Tuesday price action. So this is it. Tuesday price action started printing all the way from here. You see price created this what QMR model, right? Swept everything. This is where Tuesday price action started printing. Asia section price swept everything, creating a what this structural model. Then Tuesday price action closed all the way here, right? So this section, right, from here to here section, Tuesday section, right? If I want to off this vertical dotted lines, I'll come here, right click with my mouse. You see this section break. If I click it, everything, you are not seeing anything on the chart, right? I'm not seeing anything on the chart, right? Chart just looks scanty, right? But if I come here, right click it again, section break, I click it, you see now this vertical dotted lines is called section break. It tells you what the price action, the range of price action of a particular day. Price action of Tuesday started all the way from here and stopped here, right? So now let's go back to what we are talking about. So I use this section break in order what to spot my entry models easily. My entry models is just simple. Your normal Quasimodo, your normal QMR. If you notice, if you've been observant on the chart, you notice that the pattern or the price action price mostly form is something like this. This you get this W shape. It comes in different way. Price can form this thing, some this W shape comes in different way. Yes, this one again, and the three major shape price usually form this W shape is this thing. I mean, oh god. Um, all right. Now, can you guys see something? In this first structural pattern, you see that price swept this low, right? Price swept this low, right? In the second structural pattern, this first structural pattern, price swept this low, right? In the second structural pattern, price created what is called equal lows here. This is equal lows, right? This is it, equal lows. They are equal. Price not sweep anyone. They are equal, right? In the other structural pattern, price gave something like another mitigation here. Use this guy as another block mitigated here. You get if you're observant on the chart, you see that these three structures is what usually form on every pair you get. Now these three structures, this first structure now, this is what you form your QMR. QMR something like this. QMR is form your QMR something like this. That's something like this. A sweep of the low, price break, come what gives you inducement, and then tap here, and then pump, right? Pump, you enter somewhere like here, you enter here, right? So this is your QMR, right? This is your QMR, right? Same thing as this same structure. This same structure, whenever I see this same structure, this is how I do mostly the remitigation will be something like this. This one, equal loss, price create something like this. It will create what? Inducement and tap here. Price normally tap here and pump. Price tap here and pump, right? Let me structure, tap here and pump, right? So basically, everything, consider your inducement liquidity, right? Because you must have knowledge of your inducement liquidity and all of that, right? So this is not just for beginner. This is not for beginners, right? So this section, you must have knowledge of your what inducement liquidity, and this another structure. This one, this third structure, usually come in form of like this. Um, this third structure comes like this. The mitigation. Let me draw it properly. Something like this. Bam. This is your remitigation. Bam. Price awards. Come here. Give. Mitigate again. Bam. Right. From observing, just have to go to the chart and observe all these things, right? Observe all these things, right? So you see now, observing. These are the re-mitigation here. Price mitigated with your inducement liquidity. You enter here. This is where you enter. In this structure, this is where you enter. In this structure, this is it. This pattern, like this W shape pattern, comes in this in three forms, right? The one that sweep liquidity, the one that creates equal lows, and the one that gives something like what re-mitigation, or let's say double mitigation, re-mitigation here, right? And the most important thing, what you'll be expecting, the characteristics of this structure. If you see this structure, what you'll be expecting to have see in this structure is what? An inducement liquidity, number one. Be expecting to see what? An inducement liquidity. Number two, you be expecting to see what? FVG, fair value gap. Fair value gap is very, very important, right? Although some don't usually have fair value gap, but you expect to see fair value gap, right? I expect what? I expect price what? Break structure. This is what? The first market structure shift, because price swept here. Price swept this low, right? Since price swept this low, since price swept this low, you expect price what? To break above this high, right? And now it's good to price what? Give you what? A double break of structure. This is another price will give you a double break of structure. It gives you confidence that this that but you buying from here is what? A high probability what? Trade, right? Price give you what? The structure shifts here, and what gives you another break of structure with an inducement here. Fair value gap will be around here. Fair value gap will also be around here in the other block, right? Price mitigating here will gives you what? A high like will give you that confidence that this will be a high probability trade, right? Now, also you have to learn about candlesticks. It's not everything that I'll teach here, but I'll basically teach my entry models. And for you to able to use that my entry models well, you have to learn many things. Candlestick theory, CRT to someone also tells me asks me about the strategies I do use, right? I use my like market structure is what I actually use, but I do consider other strategies because I know I have knowledge of CRT, SNR, key levels, and SMC. All these things, like I learned many things about the financial market, so I just simplify them into something that I usually see that mostly happen. Right, this structure is what I simplify them to. And with the knowledge of key levels, I know the candlesticks to mark out in every structure, in every POIs, right? So all these things, yeah. So with the knowledge of different different strategies, with the knowledge, you have to what? Refine them to what? Your own what? Edge, your own model, right? So basically, I say I want to teach my own entry model here. So these are three things I usually observe that happens in the market. These three structural pattern, right? Now, how I do through this thing now? This section, a day can open from here. A day can open from here, close here, right? Price open from here, give this structure, close here. Or price might not even mitigate this structure this particular day. It might be in the next day that price will mitigate this structure. Let's say this day open from here and close around here. Then in the next day, you see that price what? Come what? And mitigate here. And mitigate the structure in the next day. And what? Deliver to the what? To the opposite direction. And remember, while doing all these things, you have to consider everything you are doing must be in line with your directional bias. So not go dey do anything that is not in line with the directional bias, because you end up hitting a sell, right? Same thing as this, right? Same thing as this. Price opens here, give this structure, right? Close there, right? Maybe all the mitigation of here could be what? In London section or in New York section. Price can form this structure in Asia section, mitigate here in London section, or price can form this structure in London section, mitigate here what in New York section, or price what can form this structure in what from here to here could be what Asia section, London section price swept this low and what give a movement here, then New York section price then mitigate here and deliver. So everything is just about monitoring the daily price action in line with what your directional bias. Once you see this structure forming, you be expecting where to enter, know your place that has what inducement, your structural liquidity, and in line with your FVG. Fair value gap is important, but sometimes it doesn't appear in everywhere. But your structural liquidity in line with your directional bias, with the knowledge of, like, make this pattern, let this pattern print in your brain. This structure, this w shape pattern, let it just print in your brain. It can come here. If you invert this thing, it will be what M shape. Let me invert it, right? Invert skills, right? If I invert this guy, it will be what in M shape. Are you seeing it? I inverted my trading view, right? It will be in M shape, right? So let me go back and re-invert it, right? So all these things, let's since you've my entry model is just, it's just your normal Quasimodo, your normal QMR, but they can come in different form. Quasimodo, this one I can sweep the low. This one that will have um, 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 equal lows, and this one that will have what ring mitigation. So it's just basically your QMR, Quasimodo, nothing else. Have inducement long, right? So that's it, because Quasimodo is what actually works in the financial market, no doubt, no doubt. But it doesn't work every time, or will I say it works oh, but once you is in the wrong trend, like is in the wrong direction of the market, it will fail. There's no two ways about it. Once that your entry model is in the wrong direction of the market, it will fail. That's why you have to what, put more interest analyzing and getting the proper directional bias. Go to higher time frame, put more energy in analyzing to get your what, your good directional bias. If you are confused, ask another person, abeg, what's the directional bias of this pair? And once you want, if you're analyzing and want to get your directional bias, the higher time frame, the time frame you get your directional bias is what, higher time frame. You don't go analyze and get your directional bias in lower time frame. The time frame I use to analyze and get my directional bias is what, daily time frame, weekly time frame, and monthly time frame, right? Now my median time frame is what, 1 hour time frame, 2 hour time frame, and 4 hour time frame. I don't usually use 45 minutes and 3 hour time frame. I just put it recently, but I don't use it. Let me just remove it. Let me remove it. Thank you. Let me remove it. Let me remove it. This and this, right? So now this is it. Um, 30 minutes time frame, 15 minutes time frame, and 5 minutes time frame is my lower time frame, where I find entries or where I refine my entries, right? I will get my directional bias from higher time frame, which is what, daily, weekly, and monthly. Then once I've got my directional bias, I know where price is moving. I know that price is moving from point A, and I know the point B that price is heading to, right? Then I'll go to my median time frame, find POIs that in line with my directional bias. And my median time frame is what, 1 hour, 2 hour, and 4 hour. I will find those POIs in line with my directional bias. Then refine those POIs in my lower time frame, which is 15 minutes, 30 minutes, and 1 hour time frame, right? With my knowledge of this section break, right? And also my knowledge of key levels, my knowledge of CRT, my knowledge of SNR, and support and resistance, all those basic, and also my knowledge of candlesticks, to know where the particular candlestick to mark out from. Like, I can't teach you everything in a day, right? But I'll make sure to tell you my entry models. But even with my entry models, you can be spotting good entries, right? You can be spotting good entries, but that knowledge is not enough. You have to gain other knowledge, right? To combine everything and refine it and get your own edge and make it in the financial market. So now, enough of all the theories, let's go to practicals, right? So I've tell you the candlesticks I use. These are the candlesticks I use: 5, 15, 30, 1 hour, 2 hour, 4 hour, daily, weekly, and monthly. And my higher time frame candlestick where I find my directional bias is 4 hour, daily, weekly, and monthly is my higher time frame where I find my directional bias. And my median time frame, 1, 2 hour, and 4 hours, my median time frame. 30 minutes, 15 minutes, and 5 minutes is my lower time frame for entry and refinement, right? So now let's clear the chart and hop into what practical aspect of this section. Now, are we sorry, are we on this of sorry? Yep. delete. Then I think is in candlestick line format. So I'll put this thing in this format. Then okay, let's pick a point and start analyzing from this GU, right? Let's say, hey, okay, this is what I said, right? Oh, wait. Let me go back. Let me go back to what I played. Let me go back. Control Z, I beg. Control Z everything. Control Z everything. Okay, all these things are important. I'll have to keep them, right? No need of deleting them. So I'll just highlight all of them and group them in one page. Just highlight all of them. I group them, right? This is it. I group them. From here to here, I highlight. Sorry. I add them to this group, right? So now this is it. I'll lock it, right? Okay, let me okay, I just let me put something here. Remember this structure I told you guys? Remember? This. Like let this thing be your let a picture of this thing print in your brain. Okay, look at this thought structure now. That's what I want to show you guys now. Daily time frame. Remember this daily time frame? Uh okay, this is daily time frame. Candlestick. Sorry, this is not daily time frame. Okay, daily time frame now. We're in daily time frame currently, right? Let's start from a point. Let's say, okay, you see this W shape format, you see it, price what remitigated here, and you should basically know that this guy is ready for what fast, like want to take out the opposite direction. Once you see that price what, let me say, if you have a high range here, right? You have a range here, right? Let's say a range high here from here to here. You have a range high here, right? From here to here, right? And price does what? Form something like this. Form something like this structure. It's definitely gonna take out what the opposite range, which is what this guy something like here. I don't know whether you understand what I'm saying, but it's basically this thing I'm explaining. This daily time frame, price from this structure here, price from this structure here, means say that price is what the bulls are ready to enter the market and what run. The bulls are ready to enter the market. Now this is it. Price takes out this side, right? Price takes out this side, and okay now let's start from something. Let's start. Okay, this is it. Let's start. Since we are in daily time frame, to get to what our directional bias, right? We're in daily time frame to get our what directional bias, right? And and uh, all right. Since we're in daily time frame to get our directional bias, let's say price was actually here. I know that price will take out this range high. That will put. Let me mark out this guy. Let me mark out. Let's say something from here, right? From here, right? Then lock it. Then what's our target? Our directional bias is what for price to what take out this high. Bam. Our directional bias is what for price to what take out this high. Bam. That's it. Take out this high. Bam. But in price action in lower time frame, you don't expect price to what? You don't expect price to what? Go just you don't expect price to what? Travel straight like this and just take out the high. You expect ups and down, right? You expect what? Pullback. You expect pullbacks to happen, right? Price will move for something like this. This is how price moves. Price don't move in straight line. Price moves in waveform, right? Up and down, highs and lows, right? So this is what you expect retracement to occur. Yet that's why you see retracement here. You see retracement here, right? This is ups, down, ups, down, ups, down, ups, a deep retracement, a pullback. So expect all these retracements, and your ability for you to navigate through all these retracement is depend on your experience in the financial market. You have to be experienced, right? Newbie will hardly navigate through the retracement. But no matter the retracement that is occurring in those lower time frame, remember your higher time frame bias is very, very important. Focus your higher time frame bias. Once the retracement is occurring, you'll be like you scale up to higher time frame and be like, oh, where will this retracement and stop? Where will this retracement stop, right? Where will the buyers take over the financial market? Let's say this guy is pulling up, right? and price started retracing all the way from here, right? You scale out. Let me say I was in 4 hour time frame, bias here from here. Price started retracing all the way from here. You have to what scale up in low high time frame and say, oh, where will this retracement stop, right? For buyers to gain back power and what keep buying. Now, this is it. Okay, this sorry. This is our this is where we marked out in 4 hour time frame. Remember, we've gotten our directional bias in daily time frame. See the line, horizontal line. You say that price will take out this side, and you say, oh, let's start from here and analyzing. Now we've gotten everything. Now 4 hour time frame, let's analyze the structure and mark out our POIs and know where price is actually going to. Okay, now this is a clear structure from here. Price started from here. This is it. This is it. This is this structure. Up, up, up. Why? Price takes out this guy. Now, now this is it. This is a break. This is a break here. This is a break here. Um, this is a sweep, right? Now this is an inducement that price already give, right? Okay, and also remember, this is a break here too. 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 Okay, let me mark out this break. I'll tell you the reason why I mark out this break, right? This is a break here too, right? So now you see that the pullback here, price didn't give actually didn't mitigate any valid PO. This is 4 hour time frame. Remember, every POIs, every highs and low in this 4 hour time frame is stronger than that one you are looking at like in your lower time frame, right? See this pullback, right? This pullback is an incomplete pullback to mitigate here, but still price use this pullback and break this structure. This is also another block, right? It broke a structure, right? In higher time frame. If you see this kind of structure in lower time frame, it will not be strong. It will actually be invalidated, right? But this 4 hour time frame, so all this structure is actually strong enough, right, to withstand price, to withstand all those pullbacks and those ups and down, right? Okay, now see now in daily time frame, you see how this candlestick form. That's why I say you have to have your knowledge of candlestick too. See that zone we mark at the price supposed at least give us a good pullback before pumping. But you see this since you went up to daily time frame, you see that price have formed this candlestick. This is what your engulfing candlestick. Since you see that price have formed this candlestick, it will tell you that, oh, this zone in lower time frame to be strong, it will hold price enough, right? So you have your knowledge of candlestick too, yet and your price action, not just one knowledge you expect to start making money in the financial market. After all this knowledge, your experience will help matters a lot, right? So now let's go down to 4 hour time frame and analyze, right? So this is it. So this is our valid order block from daily time frame. It appears that what engulfing candlestick sits here, that it appeared that engulfing candlestick, right? Bullish engulfing candlestick. So in 4 hour time frame, it sit as other block, right? So now this is it. This is how price was, and this price formed this structure, this structure like sorry, price formed this structure. The you see now, price swept everything here, up here like this. Create what? Inducement, bam, and then tap it and pump. Are you guys reading this? You see what price? The price swept this low. This is an inducement, and this is a break of structure. This is what the initial what market structure shift. This is a second break, and this is it. Price what inducement. This is a pullback here. Then price what takes out here. Now this is where I'll mark out as break of structure. Why? Because this is a high that initiated this mitigation here. You expect price to break this high. You mark this high as break of structure. Then another what? Yes, this is price has formed what other block here. This zone. This is another block here. Price has formed other block here, right? Because this zone here actually broke structure. So you expect price what from in future time come and re-mitigate here, right? You see other blocks. So in future time price and mitigate it, other block. Till price takes out every low here, you keep looking at other block, right? So this is another other block here too. Okay, this is a break. Let me mark out break of structure. Then you look at the other block that engineer did the break of structure. So this is it. This is a break of structure here, right? So where is the origin of this move now? The origin of this move is somewhere here, right? So this is somewhere here. So but if you refine all these things in lower time frame, you see that there's still a possible mitigation zone here, right? In future time, see price mitigate a breaker here, right? So let me delete all these things, right? Let me scale down to I you said I do navigate through every time frame, right? So you see something like this, this structure here. This is what a sweep. Price swept all these things, and price what? This is the neckline, right? Then price swept it and mitigate here, right? And then boom, all these things. Now price what? Mitigate here and pump. Price mitigated the neckline. This is the neckline that price mitigated. This is the neckline that price mitigated. This is the neckline that price mitigated. Let me delete this guy. You see the neckline that price mitigated. Let me scale down to 1 hour time frame for a clearer view, right? So this is a clearer view. Forget all this noise. Forget this noise I seen here. This is the neckline that price came and mitigated. See the engineer liquidity here, right? So this is it. So this structure, this W pattern structure that I first show you guys before explaining these things is actually what is conversant that you will see it every in the market. Now with your knowledge of candlestick, you know how to refine in lower time frame for more entries, for good entries, right? So this is it. So this is it. This is it. So now let's since our direction we started from here and price started printing and broke structure. This is a structure break we mark out in that 4 hour time frame. A break of structure, a break of structure. All right, a break of structure. This is a break of structure you mark out in that 4 hour time frame. All right, and we expect price um excuse me, we expect price what to come mitigate here and then pump. Remember, our directional bias in higher time frame is still bullish. So this retracement that is coming here is not permanent. It's a temporary. It's just a retreat correction that price will make and and tap this structure before what? Before pumping. You get the correction that price will make. Tap this structure before what? Keep pumping. Remember, we've analyzed 4 hour time frame and see the structure of that. Now directional bias, we first treated it right. You go to 4 hour time frame to see the clear structures, and we're marking out clear structures and looking for what? POIs, right? So now this is also a POI here. You see this POI here, this FVG here. You see, then if I scale up to higher time frame, I want to see something here. See this impulsive move that price make here, right? This price what created what? An imbalance. You expect price what come back and rebalance this thing. See, so with your knowledge of that, you have to have mini knowledge in order for what? For you to be able to navigate this financial market properly. So now this is it. Now let's say let's start from here and start printing our this thing. Okay, also there's something. Let me check in higher time frame. This pullback, let's know where this pullback is actually coming from. This pullback that happened here. This pullback that happened here. This pullback. Let's know where this pullback is actually coming from. Let's know where this pullback is actually. Must be a key level in higher time frame, in that daily time frame. It must be a key level in that daily time frame. This is it. All right, this is key level. This is a key level, right? This key level. Is this a key level in daily time frame? I don't know whether you know about this key level, right? This is a key level in daily time frame, and this is where this pullback is actually coming from. Let me mark it out. This is a key level from here. That block. This is a key level, and this is where this pullback is actually coming from. So mark it out. So we start looking for our entry models here. You navigate the up and down movements, right? You have to be careful and just follow your rules before you start hitting SL anyhow. Okay, remember with the knowledge of section breaks, with the knowledge of that section breaks I gave you guys, all right, the knowledge of section breaks I gave you guys, all right, all right. Then I'll on my distance section break. If I on my section break, see this structure. Are you seeing this structure? I mitigated that AVG in 4 hour time frame. You are seeing this structure, right? This up and down structure. A sweep of this low and what break. See all this thing. This is an inducement liquidity that price gives, right? So now you'll be expecting what to enter your long entry here. Expecting your long entry here. You get expecting your long entry. This structure formed what on Wednesday. This is what the what section break from here to here. When is this price action started printing all the way from here and stopped here, right? Then Tuesday price action is what actually created what the inducement. Inducement. This price action is what actually created what the inducement for the mitigation here. Me, man. Tuesday price action is what actually created the inducement. See that patience you're observing. You just be observing the market. Monday created what the structure. Tuesday created what sorry, okay, so this is Wednesday, right? This Wednesday. Wednesday created what? The structure. Friday, I don't know what happened here that missed Thursday price action and Friday. Yeah, and just jump into Friday because this is what Wednesday you can see it now, and this is what Friday, right? So I don't know why price missed. Maybe there was a news release or there was bank holiday then that price didn't print any price action on Thursday. but this is Wednesday price action, and price created the inducement what on Friday, and then the mitigation was what on Monday. That's the upper week. So you have to what be patient once you are spotting out these your entries. You have to be patient, and also this move here, you can scale to lower time frame. That's 15 minutes time frame, and find entry here. But that one, I won't waste my energy and go there, because that one is advanced something. If you don't have knowledge of price action, it will be hard for you to navigate there. Now you see, now sell price is basically price what not taking out the low of this Wednesday, right? Wednesday form the price action, Tuesday form the what the inducement of this price action, and price mitigated here and then pump. Now since price has pumped, and price what pumped and tapped what our key level. Remember, we only our eye is only spotting out this W shaped structure, right? Those W shaped structure I first showed you guys initially. That's what your eye should be spotting only in the chart, right? So now, since price what tap the that daily key level, you expect what a pullback. Now the pullback is happening. Then the pullback you're expecting to happen is what to mitigate this guy, this 4 hour structure you just analyzed. This is a 4 hour structure. Now price has tapped what the key level here in that daily time frame. Now this is a 4 hour structure you expect for the continuation of the buys, because you expect the sellers to enter the market, and from here get you go to higher time frame, mark out your anticipation of how the trend is going to look like, right? Then you go down to lower time frame and start finding your entries. Okay, let's get down to that for 3 hour time frame, sorry, 30 minutes time frame. Scale down to 30 minutes time frame, and this is it. Okay, now from here, this is where price started selling from, right? This is where price started selling. Let me delete this guy. This is where price started selling from, right? So now this day opened from here, bam, and price what boom broke this low. So I'm reading the price action of the day. Price broke this low, bam. Price broke this low. Price broke this low, yeah, and came and mitigate here. Fine, but me, as price, I'll be expecting what price if it were me, I'll be expecting price what mitigate here. Fine, because I have a sweep here and price break here. I was expecting more mitigate here and keep dumping. But since price is missing and keep dumping, fine. I've missed the trade for this particular day. Then that was Tuesday. Then I'll wait for Wednesday, right? I'll just hands in my pockets, expecting my structure to form, because I already have my directional bias. Now this, I saw something here, that's why I highlighted it. So I scale down to 15 minutes time frame. Scale down to 15 minutes time frame. Scale down to 15 minutes time frame. This is it. Okay, are you seeing this M pattern, right? Are you seeing this M pattern? Remember, this one is just like equal highs, right? Remember, the one I showed you initially was equal lows, right? Same thing, just like inverted form, right? So this one is just like equal highs. And what did I tell you guys? This is it. The breaker, the neckline, first mitigation. You get first mitigation, break neckline. If the neckline fails, right, to push price downward, here we'll actually try to hold price. You get, but our first risk on here. You get, if here fails, right? So I'll be expecting here to do it. You get, remember, price started. We missed entry here on that was a Tuesday. We missed entry here because we actually saw our entry model, right, in line with our current directional bias, and we miss entry. Now this is on Tuesday. This is our entry model, right? This is our entry model. In line with your directional bias, you enter, you get entry. Just have to wait. If your entry model doesn't form in line with your bias, your directional bias, some more, just keep on, go to other pairs. There are many pairs to trade out there. It's not most you stay in one pair. There are many pairs to, and your target will always be another key levels. Another key level. Okay, let me check another valid key level here in 4 hour time frame. From here now, in 4 hour time frame or 2 hour time frame, you check a good key level. Now, where you think that price will possibly reverse from, you get where your this thing tells you price will possibly reverse from. Okay, this is it. This is a entry here. So this is a key level here. This three candlestick pattern. So I'll mark out here. Oh, price will possibly reverse from here. Then it means I will take my profit here, so that price won't reverse. Price won't take out my profit and give me V1's profit. So this is it. This is it, right? Okay, this line I mark out, right? So I will extend my distance here. Bam. You see, and you see that this it was in 15 minutes time frame. It was in 15 minutes time frame. Oh, this thing. This is it. Um, it was in 15 minutes time frame. See, this is it. The entry here, enter here. You see that price give a reaction that like he wanted to what retrace. He gets price, they give a reaction. Now we enter there, boom. that entry was we took the trade on Wednesday, right? You see now price for Wednesday opening. This is where Wednesday price and started printing. Price cleared this high. I see Wednesday price action started printing here and price cleared this high, right? Price cleared this high. Price clear this high, forming that structure, this double top structure, and this is the neckline. We entered here, we took profit. Then you go and start looking for your entry models again. Remember, you have your targets in this is your target here, this zone here. Price have not reached your target. You just keep waiting and spotting out your entry model. Tuesday open, you open your charts. Tuesday open, you open your chart. Then let me see, I'm seeing something here now. But you see this structure clearly in what 5 minutes time frame. See the structure clearly in 5 minutes time frame. 5 minutes time frame. See the structure clearly in 5 minutes time frame. See something here. All right. This is something like the M shape pattern. Okay, okay, okay. Now, remember, this is where Tuesday opened. Price took out all this high. Price took out all this high, right? Price took out all this high, right? So this structure. You see, took out all this high, gave what a remitigation here, and dump. So expect price what use this zone. This mitigate a zone here. Expect price what mitigate a zone here. Yet expect price to mitigate a zone here. So let me scale up to 15 minutes time frame and see something clear, because I'm not seeing something clear in this 5 minutes time frame. So you see I'm navigating through time frames, right? In order to get the one that will give me a clearer view of what I'm looking for. So this is it. Okay, this 15 minutes time frame. This 15 minutes time frame. Okay, let's know what 15 minutes time frame is talking about. This was Wednesday. Remember, this is when Wednesday started printing and price took out everything here. This was a break here. Okay, this would have been an FVG, fair value gap here. 1, 2, 3. This would have been a fair value gap here. But you see how price came and retouched it. Sell price came and retouched it, telling us that this zone has been mitigated. This fair value gap has been cleared, has been covered, right? Okay, now let's know another POI. So let's talk. Okay. We first of all risk on the neckline here, neckline here. So from the neckline, this don't say I'm refining. I'm refining. This refinement I'm doing, from the neckline here, the price has mitigated here. So you'll be expecting what? Okay, let me use these zones that hasn't been mitigated. From the neckline here, I see a POI here, this three candlestick POI. I don't know what you guys call it, but I know that this is a valid POI. Then I'll mark out here, and it's in line with this neckline here. So no need, instead of me marking out this neckline entirely, I can just decide to what? Mark out this POI from here. All of them are same thing. You get? All of them are same thing. Remember, you have mark out all these things. I used to mark out all these things accurately in order to not miss my entries. You get? Okay, okay. This is it. If you zoom it, you see that it's always in line with the neckline. You get? You see that it's in line with the neckline, so there is no need. You just put your entry here, and this is your structure you are looking for. Remember, this is your structure, a sweep of this side, a remitigation of this zone. You wanted to enter it because normally I told you guys that here we'll have FVG, fair value gap. If the thing hasn't been mitigated, you enter from here, but here has been mitigated. So let's follow this neckline that hasn't been mitigated. You get? Okay, now you see that you miss entry here when you entered from here. That day, that same day, you miss entry here because you'll be waiting for price to tap your entry here. You'll be waiting for price to tap your entry here, and then your stop loss could be here. You can decide to cover your stop loss because the whole point of invalidation is this high safe. You get? But me, I'll not put my stop loss here. I'll just put my stop loss. Let me see this FVG that has been mitigated, because I'm not expecting price to mitigate this FVG. So that's where I'll put my stop loss. This FVG that has been cleared, I'm not expecting price to mitigate it. So that's where I'll put my stop loss. And my target should be wherever higher time frame POIs. Now see that price missed my entry here. So now you see this I think okay, this spike could be news, right? This spike could be news. So now if your order is still open here, price miss entry here, your orders will be still open here. Let's know whether this zone mitigates it. Let me If your order is still open, let me scale. All right, I seen it scale down. I seen it. Now you see the sniper here. This zone it was mitigated. I seen the sniper here. I seen it. It was mitigated, right? So it was this line, was it this zone here. You see how we are just following my entry models in line with what directional bias, and your TP will be higher time frame key levels. The medium time frame key levels. That's your medium. You took entry here. Your TP should be here. Okay, now expect price to take out here. Now you expect price to take out this zone. Yeah, this line. Then where should be your TP? Oh, since price you're expecting price to take out this zone, definitely price will take out this zone. You can just put your TP here safe. You just expect to take profit around here. You get, just be patient and be waiting for your this thing to form in line with what your directional bias. You get, now price has taken out this guy. I don't know why this guy, but remember now this place mitigated though, so I don't know why this my short two is not shining blue like here. But as you can see, if you zoom it, you know that the zone was actually mitigated. It's not miss entry like this one missed the entry. Now price came and mitigate here and pump, right? So now this is it, and now price delivered all the way here. Now we are still short to why? Because we have not what tap our key level. This is our structure. Remember, this is our structure here. You expect price to what tap this structure and before buying. You get, that's why I tell you your bias before what, your bias before entry. Now our bias is what, price mitigating a high time frame PI, we expect a pullback for price to tap here and keep pumping. Now since we are still shorting, although we took first trade here, you suppose take one here, but price miss entry. You took first trade here, took another one here. You see, we are patient. It's not, that's why you not be taking not be taking trades every day. You can take one trade here before you see another setup in the same pair. It will take after 2 days before you see another setup here. You not just be waiting. You have other pairs that you are trading, right? You have other pairs. You still be looking for same thing in other pairs. You get, you can see one setup in this pair today. Tomorrow you see another setup in another pair. Next tomorrow you see another setup be feeding you. JPB can feed you today, tomorrow gold will feed you, then next tomorrow it will be BTC that will feed you, then next the other days it will be what, JPY pairs, AUD pairs, right? So to me, some people do stick to one pair or trading one pair is fine, but me, I like trading multiple pairs, and I know what I'm looking out for, right? So I know exactly what I'm looking out for. That's why I don't rush, right? And yeah, I do encounter losing streaks. Very, very rare. I cannot deny that. I do encounter losing streaks. And I know that my losing streak, it doesn't mean that my strategy or my entry model doesn't work. No. My losing streak is always caused by my directional bias. Once I'm in my losing streak, I already know that, oh, I'm facing the wrong trend of the market. Like the directional bias is not clear. That's why I say, if your directional bias is wrong, they no born you well. There is no entry model you are using to make profit. It must be hitting SL or be giving you V1's profit. So your directional bias first before what, your entry models. You get my point. So remember, price has not mitigated here, and price started giving us a reverse from here. So we expecting what? You'll be looking out for POIs at the premium level, right? You'll be looking out for POI at the premium level where you expect price to tap and what, and reverse from. This is, you'll be looking out for POIs here. Be looking out for POIs here. This is a POI that formed here. Okay, okay. This is the guy. Let me hide this guy. Okay, now you see this indecision candlestick, and this indecision candlestick. You expect price what, react from here. You get, either price reacts from here, this whole zone here, this whole zone. You expect price what, react from here, this whole zone. You can, let me first mark it out at whole zone. Is when you go down to lower time frame, when you want to refine it for your entry. You start refining it. You get, remember, price was giving what, a reversion from here, but price has not mitigated where you want price to mitigate. Remember, a break of structure here, remitigation, break of structure, this low that actually broke structure, expect price to come and tap it and break and pump up. Like your knowledge of other block mitigations, right? Your knowledge, price mitigate other block, break structure, come back, mitigate other block, break structure, mitigate other block, break structure, mitigate. Basically, this is what price will be doing. Price can do something like this, mitigate other block, break structure, mitigate this other block before price will break this structure, before price will come back and mitigate this other block. It can be giving series of ups and down movements, give inducement, come like this, giving up. Price can even take weeks before it will come down, mitigate the main order block that actually cause the break of structure. That's this. You've been just marking out your breakout structure for everything to be clear for you, right? You get marking out your breakout structure for everything to be clear. You get once you mark out your breakout structure, you mark out the origin of that breakout structure. You mark out the origin of that breakout structure. You mark out your breakout structure. This is the origin of the breakout structure. Mark out the origin of the breakout structure. You see, this one is an inducement that I just put to. Price has not mitigated it. Mark out the origin. Price can give something like this, mitigate a small key level here. But the main order block zone, the origin of that breakout structure is what you expect price to what? Come back in future time and sit tap. And this origin will help you to know what how your directional bias is gonna move, right? You expect it to help you to know how your directional bias is gonna move, right? So all these things is just constant practice with the knowledge you have. This video is gonna be long, so but you guys requested for it, so I think it worth it, right? So let's continue. Now this is it. This is another block here. You get, you expect price to what? Give a reaction from here and we'll start and dump to here and give us what? The main, this is the zone you expect the change of character to happen. This is the main zone you expect the change of character to happen. But if I will advise you to enter here as a change of character, you expect price to give you some reactions. This way you can valid entry. You get, you be monitoring trades, right? So you just be looking at what price is doing. This is it. This zone now. Let's refine this zone in lower time frame. This forward time frame, I mark it out. I mark it out. Refining this zone. I'll say, oh, this is my indecision candlestick. Let me mark out this indecision candlestick first. Sorry, this indecision. Okay, let me just do all this thing and refine this thing in lower time frame. Scale down to 1 hour time frame. I know that I'll see something. A good refinement. All right. Okay, let me scale down to 30 minutes time frame. Scale down to 30 minutes. And you see, I'm refining all these things. All right. Scale down to 30 minutes time frame. This is a sweep of this side. This is a structure that we enter shorts from here, right? And price creates similar thing here. I get, you get. We entered from here. Price creates similar thing here. And what's here? What should we enter now? Since price creates similar structure here, this empire structure here, this is it. Remitigation, this is it, and up. Where do you expect to enter? The neckline, right? Where do you expect to enter? You expect to enter the neckline, right? You get. This is a neckline. If the neckline fails, where do you expect to enter again? This is a neckline or something like here. This is a neckline. You get, you expect to start shorting from the neckline. Remember, if the I told you guys, if the neckline fails, the main order block will surely hold. And what's the main order block? This zone here. This zone here is the main order block. It will surely hold if the neckline fails, right? So this is it. uh I see this 30 minutes time frame. Oh, same structure here. You see this same structure, equal highs. Same thing happen here. The thing mitigated here. The neckline held, right, and push price down. But here now we enter from the neckline. We entered from the neckline, and the neckline couldn't push price down. Then you expect what? The main order block what? To push price down, right? So this is it. Let's say you enter from this neckline. You enter from this neckline. Enter from this neckline. If me I enter from this neckline, remember some people can put their SL above here, but me I will definitely not put my SL somewhere here. I'll put my SL somewhere here. You get? I'll put my SL not even above there, somewhere here. You get? Or at the beginning of the order block where I'm expecting the order block, because this structure now have two zones for mitigation. This 30 minutes time frame. If you scale down to 15 minutes time frame for better for clear view of the structure, this is it. Although it's jaga jaga in this format, but let me put it in line this time. Know whether you guys will see. This is something like this now. I don't know. Your eyes should be able to not see what I'm talking about. Jagaya in this format, right? All these things now. So, but in 30 minutes time frame, sorry, Control Z. Oh, sorry guys. What's it talking about? Yeah. In 30 minutes time frame, remember these refinements we are doing. We don't choose our POI from higher time frame. Then we are refining it in lower time frame to know where to enter. Now this is it. The neckline fails, right? We enter the neckline. We expected price to what? Take out everything. Expected to push price down. Remember, expected to push price down. Then the neckline failed. I didn't mean you put your SL here. Still, you not. There's no need of you closing, right? You can still hold, right? But me, somebody like me that will put my SL in the other block and still expect to re-enter from the other block if the neckline fails, because I have my directional bias where I'm expecting price to go. Remember, I have my direction. You get, remember, you have to have your direction, right? That's why I say in everything you're doing in life, you have to have your direction. Same in trading, you have to have your direction where you're heading to, right? And then following your entry models. Remember, the neckline fails, right? Then I was expecting to enter from the main order block if the neckline fails. This is the main order block. This other block, this is where I'll put my SL above what? The high. Above this high, because the real point of invalidation is this high. If you enter here, some traders, if they enter here, they will put their SL as the overall point of invalidation. Remember, this high is actually the overall point of invalidation, because this is a structure you are looking at for. So you can enter from the neckline and put your SL here at the overall point of invalidation. Price can mitigate the neckline, still pull back to mitigate the main order block before dumping. You get. But somebody like me, I'll put my SL. If I enter from the neckline, I'll put my SL at the other block. Now you see that price will take me out. You see now price will take me out before reversing. You get. But I'm already prepared. Let me say I've already set another entry order. I've already set another limit order for what? The main order block. I'll set another limit order. I've already set another limit order at the main order block, right? You get, because I say, oh, I'm risking. Instead of risking, some people, if they enter here now, instead of risking one, some people, if they enter here, they can risk 1% of their account and put their overall SL here. You get. But me, I already know that this zone I will risk 1%. Sometimes instead of risking the whole 1%, I can risk 0.5% here and risk 0.5%. Everything is just, that's how I, that one is just based on my risk management, right? I can risk 0.5% here. That is, instead of the whole 1% I'll risk here, I'll just divide it into two. Why? Because you don't know whether price will use the main order block and sell, or price will use the neckline and sell. You get. So what if, okay, you can risk 1% here, oh, and put your SL here and then sell. But me, I'll be like, oh, price can actually use, because in this zone now, in this scenario, price use the neckline and sell. And here, price couldn't use the neckline, couldn't push price down. It was the main order block that pushed price down. Are you getting my point? It was the main order block that pushed price down. Are you getting my point? See, this is it. And our overall target was actually here, this zone. Because you expect price, as price take out this guy, you expect pullbacks to happen, right? Then now, this is another re-mitigation in this zone. Sorry. As price was as price was going, you see another re-mitigation here. Let me, where is my this thing? Remember, and it will be like, okay, this horizontal lines. Okay, let me delete this guy so that all these things will be clear. This is where Tuesday price action started. Price swept everything here. That's the mitigation here. Price took it out, mitigated here, and then dump. And then this is it. Price broke this whole zone. Now you see an FVG, you're raising a fair value gap here. A fair value gap here. You've seen a fair value gap here. I seen it. You expect price to give a re-entry from this fair value gap. This is it. The same structure, the same structural pattern that used to form a sweep of the high. You get. And same structural pattern, same this M-shaped structural pattern. You can't be like say everything you're seeing on the chart is this structural pattern. You get. If not the structural pattern, the opposite one. Are you getting my point? The structural pattern. That's why I say you have to train your eyes to be spotting these two structure easily. Then you navigate how to find your entries. All these things, like, it's constant practice, right? Constant practice. Now, somebody like me, since I do mark out candlesticks for entry, some people can mark out this whole zone, this whole LVG, you get, and put their entry here, and just set their entry in the midpoint of this whole LVG and keep their SL here, then above this side, right? And still target, and still what? Target the overall target, and still what? Place the overall target. But somebody like me, I tell you that somebody like me, I will miss entry. I will miss this entry here. Why? Because see where I will mark out. Instead of marking out this guy, this instead of marking out my entry like this, instead of marking out my entry like this, because I do use candlestick for mitigation, I'll mark out this guy. I'll mark out the ending, or let's say the beginning of the FVG. This sorry, this FVG, fair value gap, right? This is the will I say the breaker where price break. So this is where price started creating the fair value gap. This is the fair value gap. The distance between here this point and this point is fair value gap. Somebody like me, I will use to mark out the beginning of the fair value gap. It's not that price don usually mitigate this point o, price do mitigate it most times, but e do give miss entry, you get. Sometimes instead of me putting my entries in line here, I can just shift it a bit down. All these things is refinement I used to do, and the aim of refinement is for you to catch what high RR, you get. Because of it I used to trade with small capital. Not, you are not like other traders that will be like they will have millions of dollars and just one risk to reward or two risk to reward is okay for them. But somebody like other trade or somebody like me that don't have that much capital, I'll be aiming to target high RR. Then I used to refine my entries more in lower time frame to get that sniper entry and get high RR. You get high target. So other traders, if you are saying that, oh, two risk to reward is okay for them, me the same setup, oh, I'll be you see me, I'll know how to minimize that same setup and gain up to 6 RR sef from that setup they are making 2 RR. You get my point? So that's the aim of refinement in lower time frame. Same, and all dis thing are same structure, right? Now see it now. Since price mitigated here and dump, remember you catch this entry if you put your entry at the midpoint of this FVG. Remember this FVG started from here to here. If you put your entry at the midpoint of the FVG, or you get the entry, right? But if you put at the beginning of the FVG, you likely miss the entry, unlike me, right? That's it. Now, and this is another structure. Let me delete this guy so that we see this structure I want to show you guys clearly. This is another structure. Remember, I told you guys train your eyes to be seeing this M pattern structure. Are you guys seeing it? I can easily spot it, right? I can easily spot this M pattern structure, right? It's from here, right? Price, see the neckline, right? Price what swept this side, right? And then dump, right? So remember, I'll reach on the neckline. This is a neckline, reach on the neckline, mark it out, right? This is it, mark it out, and see where price what tape the neckline. Remember, I told you guys FVG is very, very important. Now, somebody like me, if I see this neckline, I already seen FVG here, right? I already seen FVG here, right? I can either decide to, for my refinement, I can either decide to mark out this FVG because I already know the zone I'm expecting price to reverse from, this neckline zone, right? And I already seen FVG here, right? If I want to minimize high RR, now I can decide to enter from here. Oh. I can decide to enter from here, and I'm okay. If I enter from here, place my stop loss slightly above here, then my this thing here, my TP here, you get. I'm okay oh, but because you want to what minimize, you want to what catch high RR, right? You want to keep refining and get the best refinement in order to catch high RR. Somebody like me or other traders that would like to more refine this guy, they can decide to just mark out this FVG like this. All these things is experience. Experience, not something I will teach. I can't teach you everything I know in a day. Experience. And then I'll scale down to 15 minutes time frame. Yet I'll scale down to 15 minutes time frame. Then I'll know where to mark out again. Scale down to 15 minutes time frame. Then know, oh, which zone will I mark out here? There's not something here. Get. I can decide to scale out to 5 minutes time frame safe. And you must see a good zone to mark out here. But since there's not even a valid zone, I can just use the midpoint of that 30 minutes FVG, right? Midpoint of that 30 minutes FVG. Get. Or let's say, let me just follow my, me using the midpoint of this 30 minutes FVG is I'm trying to refine oh, but my normal standard is what the neckline. This is the neckline I'll use, right? Okay, let me just follow my normal standard, right? Or let's say I want to refine and get more high RR. Sometimes if you refine to get more high RR, that's where you see miss entry. This price can miss your entry because why? Over refinement is not actually good sometimes oh. You can do over refinement and still miss your entry, right? Why if you follow your normal standard, you might not even miss your entry, right? Just that you not get high RR as how you get when you find the entry. Are you getting my point? So remember, see this same structure, same M-shaped structure, right? You get same structure, and this is it. Now price what hit our target. Are you seeing that price was delivered here? Hit our target, which is what in 4 hour time frame. I see that price was hit our target, which is what in 4 hour time frame. This is it, a 4 hour time frame. You not enter directly from here. Some people can enter directly from here. If you refine this zone, you can scale down to lower time frame like 30 minutes, 15 minutes, 5 minutes, and refine this good zone and get the good entry. Okay, let me try to refine this zone now. Let me try to refine this zone now. Okay, this is it. Let me try to refine this zone now. This is it. This is where this guy opened. You find it this zone, you miss entry. This is where this guy opened. This is my N shape structure. Guy, refinement is not actually easy. It's for experienced traders. Yes, refine this zone. You get this is where this guy mitigated. Okay, let me refine this zone here. Let me mark out this guy here. I want to refine this guy. Let me scale down to 5 minutes time frame. 15 minutes time frame, sorry. 15 minutes time frame. I'm not seeing a good structure here. A good structure here. I'm not seeing a good structure here. But if I want to refine this zone, let me scale up to 30 minutes time frame again. Let's scale up to 30 minutes time frame again. If I want to refine this zone, okay, I'll use this candlestick. With my knowledge of candlestick, this is 1, 2, 3. I can just mark out this candlestick, put my here. There's this candlestick pattern I usually form. I can just mark it out, put my entry here. Yes. Let me scale down to 15 minutes time frame. Uh-huh. Yes. 15 minutes time frame. This FVG. This 15 minutes time frame, right? This is your what? This 15 minutes. Remember, I'm finding the zone. Oh. This is what do you call it? Morning star candlestick, right? It's your knowledge of candlestick. Morning star candlestick. Let me delete this guy. What do you call this stuff? Morning star candlestick. This is it. This three candlestick pattern. You know what you call it? Morning star candlestick. Let me delete this guy. Remember, this refinement. Oh, refinement is actually not easy for pro. This 15 minutes time frame. Now, 1, 2, 3. I'll mark out this candlestick. This is where I'll mark out for my refinement. I'll mark out this candlestick, right? My mentees know about this candlestick. I've teach them about candlestick. This is 1, 2, 3 morning star candlestick. You should know about this candlestick. Then, and this FVG that is being created. The distance from here to here, this FVG that is being created. Now, the beginning of the FVG, this is how I'll mark out. The beginning of the FVG, I'll mark it out. You get? I'll mark it out. Then I'll scale up to 30 minutes time frame or 1 hour time frame. Let's see where price mitigated. Yes, are you getting my point? Guys, okay, let me scale up to 2 hour time frame so that my screen is not that big like other screen. You see now, in 2 hour time frame, see where the thing is. Just like this key level, all they call it SNR. All those people that trade SNR, this key level of a thing now. You get? So refinement is not actually easy for pro traders. Oh. Okay, 4 hour time frame. You see now. See how the thing look like. See how the structure look like in 4 hour time frame. Yeah. If you scale down to lower time frame for or refinement, you get like the reason why people do refine entry in lower time frames to get what high RR. Remember to get high risk to reward. So this is the inducement that price actually takes and mitigate this guy. You get now. Remember, but me, I will not enter my trade here because I was expecting what price to give me a good structure that will tell me that price the trend is ready to reverse. Remember, I'm expecting price to reverse from here, but I will not take trade here. You get? I can take trade here, but me, I will not take trade here. I'll be looking for a confirmation, right? A structure shift in 4 hour time frame. And now see how 4 hour then create this structure for me. Now, price mitigated this one and 4 hour create this structure for me. I seen it. I seen it. Boom. I seen it. Now this is the neckline. I seen the neckline and mark out. This is the neckline. 4 hour create this structure for me. I'll be like, oh, I'll start entering from the neckline. If this neckline fail, I'll expect the other block to hold, right? I'll expect the other block to hold, right? So now, from the neckline, now to refine the neckline, you can scale down to lower time frame for more RR to refine the neckline. Refinement is not actually easy. Sometimes you see jaga refinements. Find the neckline is not actually easy. Sometimes it's jaga refinements. Now, where will you refine here? What am I seeing 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 here? Let me see here. I'm not seeing clear zone here. Let me scale up to 1 hour time frame. All right, I've seen something. Oh god, it's not easy. All right, this key level. I've seen this key level, right? This key level, this key level. Like, come on, I'm not here to teach refinement, but the whole zone is that refinement is actually if you need to minimize RR, right? So, but remember, this is where I expect price to what. You can just decide to set your entry anywhere here, but know that this is the neckline. Set your entry here. So if you want to refine, that one is another topic, right? Refinement to get more RR. So this is it. You enter from here and then deliver to the upside. This okay. Let me enter for our time frame. Then you expect price will take out this guy, right? So this is it. I'm already exhausted, and I think I've come to the end of this structure, this section, right? So see how I taught you guys my entry models, right? The entry model I do find, I do look out for this like the picture of this W shape, like what I drew at the initial before I begin my lesson is what actually I look out for in the chart, right? Let me clear my charts. Let me clear my charts. Okay, I think it was what was that entry model? Okay, my what I this okay, this is it. This is it. All these things. This is what I thought, right? The one that have a sweep, the one that have what equal loss, and the one that have something like mitigation, right? This you guys saw that you saw everything in the chart, right? So this is the bearish form of it. This is the bearish form of it. The one that have a sweep, equal highs, then double mitigation. So this is it. So with the knowledge of this thing, this is what I do just look out for in the chart. In line with what my directional bias, right? And also there is something that is called time and price. Time and price, the one is topic of another day. Also with the knowledge of time and price, I already know when I'm expecting all those zones to be mitigated too. You get, I can't remember that, like I said, I can't teach everything here. So you guys you guys requested for what my entry models, like how I do find entries, right? So this is how I do find entry. Remember, before I start finding these entries, I must have gone to my higher time frame, which is what daily time frame, and guess what, my directional bias. You get, remember this entry is trash without a good directional bias. If your directional bias is poor or is not in line with the current trend of the market, you this entry will not work for you, and that your entry, that your model, that your strategy will not work for you once you are trading against the trend. Directional bias is very important. It's what tells you, oh, trade in line with the trend. So whenever you're trading against the trend, no matter your entry model, no matter your strategy, ICT, CRT, anything, it must fail, right? So this is it. I hope you guys learned a lot from this section, and I'm always open to answer your questions, and do well to show me short examples of all these things that I just teach you guys, so that I'll know that, oh, you really put in the effort and watch this video. Me that even make this video to this video so far, I know that it's not easy for me. So I expect you to watch the video and finish this video. You get, it will help me know that I'm actually talking to people, I'm actually teaching people. Thank you so much.